Hi, my name is Jay Biondo and I am the sales specialist for the TT Score product. Thank you for joining today. I am going to provide a presentation about TT Score at a high level. At the beginning, we will walk through some slides that speak about the challenges that compliance officers face today in our heavily regulated futures markets. I will also go through a little bit about why TT Score is a unique offering and how it can be used by compliance staff not only for enhanced detection capabilities of complex patterns of manipulation, but also how it can introduce efficiencies for compliance staff in identifying where the issues lie and how you can then use the other functionality within TT Score to investigate that activity and document your reviews as evidence for regulators when you do receive inquiries. After the slides, we will have a brief demo of the software itself where I will show you TT Score in action. And then after the demo, we'll have some time for Q&A as well. So again, thank you very much and for joining today, and I will go ahead and get started with the slides. So some of the challenges that compliance officers face today include things like large monetary fines and legal fees, criminal penalties, and reputational damage. As we saw last year, 2020 was a record year for the CFTC when it came to bringing fines. In fact, there was a large global bank that received a fine that was almost up to $1 billion, which was the largest fine for spoofing activity in history. And along with those fines, what you don't see necessarily in the news is the legal fees that come along with those types of investigations, which can take years. Your firm can spend a lot of money on attorney fees. And along with these monetary costs also come other things such as criminal penalties now that the CFTC is working very closely with the Department of Justice and the FBI to investigate this activity and will bring criminal indictments for forms of manipulation such as spoofing. And it appears that 2021 will bring more of the same, where the CFTC, not only will they continue to bring a lot of enforcement actions, which is their primary focus, but also will continue to work hand in hand with these federal law agencies as well. And also another problem that can come along with these types of regulatory actions is reputational damage, where you just simply do not want to have your firm or even your own name in these press releases that talk about manipulation and the failure to supervise and identify these types of what are now considered to be criminal actions in the futures industry. Not only are the challenges focused on things like monetary fines and criminal penalties, but also the regulations themselves have become more complex. So something like spoofing is now an intent-based rule. This is somewhat still new to the industry, where you're trying to determine what a trader's intent was. You are also dealing with more complex patterns of trading activity. Things like layering, momentum ignition, flipping the market. Spoofing doesn't necessarily come in a single pattern that's easily identified, and trading is not something that unfolds in perfect order. So having a system that has the flexibility to detect many different forms of manipulation is critical. Another challenge that people are facing today is the amount of data. Electronic trading has led to an explosion in trading data and order audit trail data over the course of the last decade or so. And because of that, now you're trying to find manipulation within huge amounts of data. It's essentially like trying to find a needle in the haystack. And you're looking in many different products with different liquidity profiles. And it becomes a very huge challenge for compliance officers who only have so much time in the day. And finally, you're also dealing with implementation and operational costs, which can cause, not only can implementation take a lot of time, it can also become very costly when you have to bring in sometimes consulting firms and other people to help you get your surveillance system set up properly. The traditional approach with legacy surveillance systems that are still primarily used today by most compliance staff is using parameters to identify manipulation and generate alerts that are then investigated. But there are some really big challenges that come along with this approach. First is that you initially set your parameters very loosely because you want to see a lot of information. But ultimately what happens is you end up getting too many false positives. Sometimes those false positives can run into the hundreds or thousands on a daily basis. People just simply don't have enough bandwidth to get through that amount of information. So they start to tighten their parameters up in response to that. But the issue with that is now you're going to potentially be missing activity. And when regulators come and ask, why did you change those parameters, saying that you did it because you only had so much compliance staff available to go through the alerts is not going to be viewed as a viable response. Model error also is frequently encountered with the parameters. You're trying to set a series of if-then statements and apply them over arbitrary windows of time to generate these alerts, and quite simply, there is no quote-unquote Goldilocks zone for your parameters. So you're constantly going through a process of trying to test and verify that your models are being set properly, but ultimately there's always going to be some kind of a give and take there because of the nature of how rigid parameter thresholds are, and it becomes a very frustrating process for compliance officers. And finally, human algorithms are simply just not sophisticated enough to keep up with the fast-paced regulatory environment that we have today. Humans are constrained by imperfect and limited memory, which means that you might be trying to tune your parameters for activity that was part of an investigation from several years ago, but by the time that you're getting those parameters tuned that way, the regulators have already moved on and are looking for something else. So you're always trying to play catch up, and you're only limited to the knowledge that you have from reading through the various cases that you have, and not unable to necessarily see what's going on beyond your own four walls. Now, let's contrast that with the machine learning approach. And TT-Score is a hybrid surveillance system where we do use some parameters for some of the surveillance models that we have, but we also have machine learning technology, and there's some great advantages to machine learning. First of all, we train our machine learning algorithm. There's no strict decision trees here, and we're training our machine learning algorithm with regulatory case data from real regulatory cases. So all of your activity is therefore measured in mathematical similarity to actual regulatory cases. In addition to that, instead of overlaying parameters on arbitrary windows of time, we take an approach called clustering, where we're segmenting the user's data, and by segmenting or clustering that data, we then have packets of information that have mathematical vectors that can be measured and then measured in mathematical similarity to that regulatory case data. And each cluster that is generated is scored in mathematical similarity to that regulatory case data. So we are scoring everything on a scale from 0 to 100, with a 100 meaning this activity has a very high degree of mathematical similarity to the regulatory case data. Here's a visual tool that may assist you in understanding the clustering process better. Imagine the little white dots in these segments are the workflow events from the order audit trail data. So bids, offers, cancels, and fills. The clustering algorithm for our spoofing model uses a time series analysis to segment this data into these clusters. The time window requirement that the algorithm initially focuses on is a 10-second time period of inactivity. So if the trader is active for a period of time and then is inactive for a 10-second time period, the clustering algorithm cuts off the cluster at that point, chops it off, and then does not start a new cluster until the trader becomes active again. We also know that traders don't necessarily have a lot of 10-second time windows in their trading activity, so we made this algorithm dynamic, and that 10-second time window requirement will automatically shrink down to smaller increments of time, because we want to keep these clusters reasonable in length, because that way it will allow the compliance officers to more easily focus on the activity that they need to identify that could be viewed as manipulative. If you're creating clusters that are 2, 3, or 4 minutes in duration, it's going to be harder and harder to find those specific portions of the activity that you need to focus on. So we want to keep our clusters anywhere from 5 seconds to a minute or a minute and a half at the longer end. And once we've created these clusters, we can measure the mathematical vectors within the clusters, and then do our mathematical similarity comparison between the features or vectors in your data and the features from that regulatory case data that we train the model with, and generate the score on the scale from 0 to 100. So that is a high-level introduction to TT-Score, and now we will lead into a demo of the software itself. The types of manipulation that we will cover today are spoofing and collusive spoofing, and I will walk you through what is something of a typical day of a compliance officer who's using TT Score. First, we will use a tool called the heat map to identify what we call the needle in the haystack, or the individual within the firm that's engaging in the riskiest activity from a regulatory perspective. We'll then be able to start to investigate the activity, the clusters themselves, and replay the trading activity within the context of the market. Once we have completed our investigation, we can document our review within TT Score, and if we are identifying a pattern of concern, we can open an internal investigation and use TT Score's fully integrated case management system. So now I will switch over to the demo. So this is the heat map. This is one of the big data visualization tools that we provide within TT Score to help a compliance officer or compliance staff know where they want to begin their day. As you can see here in the upper left-hand portion of the screen, I have set the score range filter here for 80 to 100. I've loaded up 3 days of trading activity from March of 2019, and we are looking at the spoofing model, and we are looking at outright futures contracts. And what you can see here at the bottom of the screen is Trader 19 has a large red shaded square. What we're showing here is that Trader 19 had 15 clusters, or segments of trading activity, if you will. So 15 of these clusters that had an average score of 90.8. So the size of this box here is relative to that cluster count. The shading of the box is relative to that high average score. And that's how we show you, the user, without ever having to worry about whether or not you've tuned your parameters properly, exactly who within your firm is engaging in the riskiest activity from a regulatory perspective. So Trader 19 here is likely going to be where the compliance officer wants to begin their daily reviews. And to show you now exactly how much work the machine learning is doing here, when I move the score range filter here back to 1 to 100, and bring in more of the clusters that were generated here over this 3-day time period from March of 2019, you're going to see that this is actually a really large data set here. We're talking about several hundred traders and trading activity over a 3-day period. This is all real trading activity that we anonymize for the purposes of the demo. And what you can see is Trader 2927, for example, had over 23,000 clusters over that 3-day period, but a very low average score of 23. And you can also see that some of these other traders are generating tens of thousands of clusters over that 3-day period. This is information that we do not want our compliance users to be focused on. This is historically where compliance officers might get bogged down in a sea of false positives, and they just cannot figure out which of the alerts that they're looking at are the ones they should be focusing all of their time and attention on, and it becomes really an inefficient process. But now, as you can see with TT Score, when we move back to 80 and above, and we update this here, now we get back to the screen you initially saw where we have traders with 17 or 15 or 10 or 9 of these clusters generated over the 3-day period that you want to focus on to determine whether or not a pattern is being generated that may draw regulatory attention. And once you've identified that user, you can click on their square. And now what we have brought you to here is what we call our cluster list. And it's a very simple, straightforward concept where we're just listing the different clusters here by score, the highest score first. And once you've identified a cluster here that you want to investigate, you can click Inspect. Okay, once we get inside the cluster here, this is where we provide the compliance officer with the tools to conduct the investigation. I want to emphasize here that the score of a 97 is high, but this is not a legal statement that is being made by the score. Just because a score is 80 and above, which is where we've trained the model to say this is the activity that has the highest probability of drawing regulatory attention, just because a score is 80 and above does not indicate that there is criminal activity that has occurred here and that there's no further steps that need to be taken. The score is simply a mechanism for pointing you in the right direction. I like to say that it's something of a bomb-sniffing dog that's saying this is where you want to look. However, once you get to this point here, now the compliance officer has to use the other tools that we provide in TT Score to conduct the investigation themselves and draw the ultimate human conclusion of whether or not manipulation did in fact occur. And to help you with that process, we provide you with certain tools. Statistical metrics. So at the top of your screen, you can see here we provide order cancellation rate, order modification rate, volume cancellation rate. We selected these metrics because these are the metrics that the CFTC and other regulators use when they're conducting a spoofing investigation. And each one of the models that we have in TT Score has its own set of metrics and visual tools that lend themselves to investigating that particular form of manipulation. Down here at the bottom of the screen, this is the order audit trail data for this particular cluster. You can see that we color code the different workflow events. So bids are blue, offers are red. The red shading is indicating here that there's some fill volume. You have the ability in TT Score to export all of that data to Excel. And TT Score is not only a tool for investigating potential manipulation, it can also be a tool for record-keeping purposes as well. No matter whether or not you are reviewing trading activity that was generated on a TT screen or some other front end, and the data is being brought in by some other fixed connection, such as a drop copy feed, an exchange drop copy feed, if we're bringing all of that data into TT Score, it is all being saved and normalized in a single fixed format for you, and you have the ability to export all of this data here off of TT Score or off of another area of the TT platform. So again, this is a dual purpose where not only are we helping you with your investigations of manipulation, we're also helping you with your record-keeping compliance as well. But really the highlight of this screen here is when I click on the Load MD Trader button up here in the upper right-hand corner of the screen. Because what I'm going to allow the user to do now is replay all of this activity within the context of the market on an exact replica of the TT MD Trader ladder. For those of you who are not familiar, the MD Trader ladder was invented many years ago by TT, and it is the standard futures trading ladder that is used by the majority of traders today. And so what you can see here, we have 10 ticks deep price levels on the offer up here. This red column here, these numbers, those are all market participants' quantities combined at each one of those price levels on the offer. So for example, you can see there's 1,053 contracts at this top of book offer price of 98.235. And then down here at the bottom of the ladder, we have our bids. So for example, here at the top of book, you can see there's a total of 337 contracts for all market participants at the top of book 98.23 price. And now, when I take my mouse and start to pull forward in time here on the replay, you're going to see everything in this screen is going to update in synchronization. And what I mean by that is you will start to see the order audit trail data pop up and populate here at this portion of the screen. You can see that the trader added a 200 lot bid at 98.23 and a 100 lot bid at 98.23. And now you can see here on the ladder that that is reflected here with the trader has 300 contracts working at this top of book 98.23 price on the bid. This chart here is a very useful tool in my opinion, and it's simple in its concept, very powerful in showing how a trader might be using book pressure to influence other market participants while receiving fills on small orders on the opposite side of the market. There is no market data piece to this particular chart. It is purely looking at the volume of contracts the trader has on the bid and the offer during the cluster and where the fill volume is being received. When I hover my mouse over the black line, you can see here that when we go a little bit further forward here, the trader is going to add a 100 lot bid. And when I hover here over the line on what we call the pressure chart here, you can see that the trader has 400 disclosed bids in the market at that time. And that is all matching up. Everything on the screen right here is matching up. Now, what the trader is going to do next, as you can see with this red line, the trader is going to add a 100 lot offer order here. And then the red shading is indicating fill volume. So let's see how this looks now as we replay through the activity. The trader is going to add the 100 lot offer here. start getting filled instantly on that 100 lot offer order right there. The trader has a 4-to-1 imbalance ratio between the bid and the offer at that time. All of the fill volume is going to come on that 100 lot offer order, and then the trader is going to cancel the 400 that was on the bid. Let me just replay that for you very quickly again. You can see here the trader is going to build up the quantities on the bid, submit that 100 lot offer order, get filled on the smaller orders, and then cancel the 400 that was previously on the bid. So this calls into question whether or not the trader actually intended to get filled on the 400 contracts on the bid, or was the trader simply using those 400 contracts to show buying demand in order to get filled on smaller offer orders on the opposite side of the market, and the trader never intended to get filled on the 400 lot bids in the first place, which technically would fall under the definition of spoofing. One thing I also like to point out here is that the trader waited about 1.5 seconds before canceling the 400 contracts on the bid. As some people may be aware, when you are setting your parameters in a typical legacy surveillance system, you have to determine what time window you would like to see those orders get canceled and after some fill volume is received on smaller orders on the opposite side of the market. And if you're tuning your time window parameter there to say that those cancels have to occur within 1 second, then you're going to miss this activity. And that is one of the biggest advantages of the machine learning algorithm, is that it's more elastic than a typical human parameter is. And it's not as tied to these rigid thresholds where if you are not setting your parameters correctly, you miss activity. And that is how delicate the parameter setting process is. And that if you are not setting some of these parameters properly, you are going to just completely miss this activity. And then you will not know that the trader may be creating a pattern that's going to draw regulatory attention. And as we go a little bit further into this particular cluster, you can see later on the trader actually starts to put some layers at multiple price levels here on the offer, gets filled on some smaller bids, and then cancels the layers. So there's actually 2 pieces of the puzzle here that you may want to discuss with your trader. Now, once you've gotten to this point of your investigation, you do have the ability to put review notes in TT Score for each individual cluster. If you do that, you will find those review notes right here in the upper left-hand corner of your screen. Everything in Score is time-stamped and is in worm format, write once, read many format, which means that you can add additional comments to clarify previous comments, but you cannot go back and edit older comments. One other thing that you can do here, if you feel like the activity has risen to a certain level, is create an internal investigation. If you create an internal investigation, that will appear here on the dashboard screen, down here at the bottom of the screen. And let me show you an example here of a investigation. You can see in this investigation, the user has attached a couple of clusters here that are a part of this investigation, and some of the functionality within this investigation case management system. You can track the status of investigations. You can assign it to different owners within the organization. You can add comments, you can upload attachments, and again, everything is going to be saved in here in worm format for you, so that if you do have a regulatory inquiry, you can easily show the regulators that you have been proactive in your approach to compliance. You have already reviewed this activity and made your determinations, and you have the ability to present that to them. And in my experience as a former compliance officer and a regulator, the fastest way to make regulators lose interest in pursuing an investigation is to show them that you have already taken these types of proactive steps to vet this activity yourself and already taken corrective action. The next form of manipulation I wanted to run through here quickly is called collusive spoofing. So I will load up some collusive spoofing examples. So collusive spoofing is a form of manipulation that is similar to traditional spoofing, which we looked at before. However, In the previous example of traditional spoofing, we were looking at one trader ID in one product at a time. So it's essentially the most simple way that you would typically see spoofing activity appear on a surveillance system. And in that example, we are clustering at the trader ID and product level. But with this example, we will be clustering at the company level, where we will see whether or not two or more traders may be working together in order to spoof the market, or may even be trading together in the same product and inadvertently creating the appearance of spoofing activity in the market. So now, in this particular example, what we are looking at is collusive spoofing, where we are clustering at the company level. And so this chart now is reflective of the activity of multiple traders. And you can find those traders over here on the right-hand side of the screen. You can see trader 1736 and trader 1737 over here. Now, when I replay the activity in the context of the market here, what we'll find is that when we begin this cluster, a trader is going to add, trader 1737 is going to add a 25 lot bid here to this top of book price. There's also a 5 lot offer order that is working in the ladder as we come into the beginning of this cluster. But as we move forward in time here, what we're going to see is that a fill is going to be received on the 5 lot offer order, and that fill is from the 5 lot offer order that was placed by trader 1736. So trader 1737 adds the 25 lot bid at the beginning of the cluster. About 4 seconds later, trader 1736 gets filled on the 5 lot offer order, and then after that fill is received, trader 1737 is going to quickly cancel that 25 lot bid. And again, what you can see here is one trader adding a 25 lot bid, the other trader getting filled for a small offer order on the opposite side of the market, and then the other trader canceling that 25 lot bid, and that cancellation happening only a couple of hundred milliseconds after the fills on the smaller offer orders, indicating that the initial trader never intended to get filled on that 25 lot bid and was only using that to influence other market participants so that another trader within the same company can benefit from that appearance of buying demand that never truly existed. And again, just to show that again quickly here, there's the 25 to 5 imbalance ratio. So it's a 5 to 1 imbalance. The trader gets filled on the 5 lot, and then the initial trader cancels the 25 lot bid. You also have the ability to load up individual charts for each of the traders involved in the cluster here. And you can see trader 1737 has the bid, and then trader 1736 is getting all of that fill volume indicated by the red shading there on the chart. So those are the two examples of trading activity that I plan to show today. At this time, I would like to switch over to a Q&A session.
Okay. So the first question that we have here is presuming, can in some way we use TT score as preventative surveillance rather than corrective as demonstrated? For example, either by generating real-time alerts or triggering order pull of such orders. So the answer to that is that right now TT score is a T+1 surveillance system. So there is no real-time capability at this particular time. However, we do believe that we will add some real-time functionality in the future, probably later this year. However, I don't envision any scenario where we would potentially allow a user to pull orders. Being in the compliance space, some firms may allow a compliance officer to pull orders. However, that's typically not really what a compliance officer's typical responsibility is. That's really more on the trade desk, or maybe as the risk manager. If a risk manager was using some of these tools, that may be appropriate, and we can consider that when we add some of these real-time some of the real-time functionality in the future. Another question was, can you interface TT score with otherOMS, which is not under TT? And the answer to that question is yes, absolutely you can. We have various mechanisms for getting data into TT Score that is not just being generated by TT screens. You can use exchange drop copy feeds, for example, a CME or ICE or Eurex exchange drop copy feed, or we can also take in data from other fixed connections, be it from other front ends themselves, or if a firm has a central repository for all of their data, and they can also send that data to TT Score via fixed connection that way too, and we can capture all of the trading activity across all of their exchanges that way as well. Let me see, what was the next one here? What exchanges are available? Today, we have drop copy feeds available for non-TT flow. If your traders are on TT screens, we capture all of their activity across all exchanges automatically. We have market data for all of those markets as well. If your traders are on non-TT screens and you need to use exchange drop copy feeds, today we have CME, ICE, Eurex, and EEX drop copy feeds available for people today. We will expand that suite of drop copy feeds according to customer demand. So we do have the ability when coming to an agreement for TT Score to include that development work for those drop copy feeds into the terms of the agreement, and can develop those feeds within a particular set time, for example, 90 to 120 days. So that's just a hypothetical example. There was a question about whether or not a compliance officer's comments would be accessible to the traders or not. That's an interesting question, and I want to clarify that your traders are not necessarily using TT Score, and they are certainly not able to see what a compliance officer would see on TT Score. There are 3 different levels of access to TT Score. You have what we call a score admin. So score admin is essentially a super user that can see all the trading activity on TT Score, all the review notes, all the investigations. There are essentially no limitations on what they have access to. If you are an account admin on TT Score, you can only see the activity and review notes and investigations for the accounts to which you have been assigned. Those are really the enterprise level types of access that you get on TT Score for compliance officers within the firm. Now, if you are a trader on a TT platform, you can access TT Score as a score user. And a score user is only able to see the activity that they are generating themselves on the TT screens. So they don't have access to anything else within their trading firm at all. And so one thing, and one other thing to keep in mind about that is if you are a score user, you are automatically billed at the rate of $250 per month when you activate that service. Another question, does TT Score offer the feature IOP, indicative opening price? Right now, we do have a marking the close model. However, we do not yet have an indicative opening price or influencing the open model. That is actually being worked on today. I would anticipate that new model will be released here in the next 30 to 60 days. Is there a standard time frame to leave an order in the market to lower your score? That's a great question, and that is a big gray area in the regulatory rule, and in particular with spoofing. Obviously, it's when you're submitting orders with the intent to cancel prior to execution. And order duration is certainly one of the factors that are taken into consideration by a regulator when they're doing the totality of the circumstances type of an analysis. But they have never drawn a bright line about what is adequate order duration. So what you'll see, for example, is in some cases, the cancellations of those larger spoof orders will happen within that 1 second or second and a half type of a threshold there, because those are maybe potentially, I guess, easier to prove in the eye of a regulator. However, that is not necessarily always going to be the case, because if there's a pattern being established, even if you have decent order duration, you can see spoof orders resting in the market for a significant time period, potentially a few ticks deep off of the top of book, So they're not being filled, but they're sitting there while the trader is still getting filled on the smaller orders on the opposite side of the market. And the regulators will not necessarily say that that isn't spoofing if those larger orders that are deeper in the book simply aren't ever getting filled or very rarely getting filled. So it's a judgment call. And I think ultimately it comes down to, is there a pattern? And is the pattern occurring in particular products over the course of several days or weeks or even months? And you can see clearly that the trader is simply not getting filled on these larger spoof orders on a regular basis. And a good example of that might be that that case that was recently publicized about JP Morgan, where they had a collusive spoofing type of a situation where one of the traders would leave their orders in for many minutes sometimes while the other trader was getting filled on smaller orders on the opposite side of the market. Will the price ladder logic be available if using a third-party EMS? Yes, absolutely. You do not, again, need to be using a TT screen to get any of the functionality on TT score. You can be bringing in your order audit trail data via other sources and then you just get everything that's on TT score automatically, including the market data for the ladder replay and the ladder replay tool itself. What other rule sets utilize advanced analytics like the spoofing analytics? So another model that uses machine learning in SCORE, if that's what we're meaning by advanced analytics, would be our abusive messaging model. That particular surveillance uses a hidden Markov model to identify bursts of messages that are occurring at a high rate. And what we're really capturing there is a couple of types of issues. One would be quote stuffing, where a trader is sending in these messages at a high rate, and many of the messages in bursts in order to potentially create latency in the market for whatever purposes they're doing that. And the other thing that it can identify is a malfunctioning algorithm. So potentially the algorithm is, not throttling properly, and it is, sometimes people will say it is looping at a very high rate. That model would detect both of those types of activity, and it's not tied to any specific exchanges messaging requirements. So it will identify these bursts regardless of what market you're being traded, you're trading on. And then those are really the two machine learning models. The others are primarily parameters based, but the marking the close model in particular uses a really sophisticated set of parameters that incorporate market data into them. And so that is another model where it might not be machine learning, but it is, I think, better designed than most of the other legacy systems that you might see out there today. Would trader users be able to get alerts if their activity might raise flags? Yes. So there's really, I think the best way to do that for a trader is to sign up as a SCORE user by enabling that option within the TT user setup, or having their firm enable that for them. Then they can log on and they can see their scores automatically. The other way would be, potentially where a trade desk manager has access to TT score at the firm. I don't know how often compliance officers really want to give the traders necessarily access. Sometimes compliance officers like to have access to this type of information themselves so that they can, take corrective action without the trader necessarily being in the loop in that situation. So that would be on I think a case-by-case basis, which determined by the firm itself. Does SCORE plug into news feeds to see if the trader activity was news driven? The answer to that question is no, not today. That may be something that we would potentially explore in the future. Can you explain the cross trading model at a high level? What does the model identify as activity with a higher score? So cross trading is different than wash trading. And in cross trading, we're looking at two individuals within the same firm who are executing against themselves. So, and it can, let me back up. It can be one single individual executing that has two different accounts against themselves, or it can be two individuals within the same firm that are executing against themselves, each other. And so it's looking for those potential, prearranged types of trades, but then it's also measuring the order duration of the initial order prior to the cross to see if it's resting in the market for the CME's required 5-second resting period. Excuse me. And then if you don't rest that initial order for the 5-second period and the cross then occurs, you will get a high scoring cluster for cross trading. And those are the different factors that we're taking into consideration in that model. Can you use the software to analyze P&L of a trader and link it to timeframes and compliance scores? That's a great question. Today, you cannot do that, but we are in the process of working on that type of functionality right now. Will the real-time functionality be able to alert traders real-time when they are generating high scores? Yes. In fact, what is likely to happen is that this real-time functionality will actually sit not necessarily right within TT Score, but in another application on the TT platform, which is real-time, and you would be able to get those alerts. It can all be tied together with Score, but I think it may sit outside of TT Score at the beginning and then eventually just kind of be merged together as a single kind of a risk and surveillance combination tool. Just make sure. I am going to try to answer one more of these quickly. Well, it looks like we did actually get all of the questions answered. Thank you all very much for sending in your questions. They were wonderful. And I hope that everybody enjoyed the presentation today. If you do have additional questions, you can please feel free to contact me at my email address is j.biondo at tradingtechnologies.com. And of course, if you would like to see a demo of TT Score, a personalized demo, I'd be happy to provide that to you as well. So please feel free to reach out to me anytime. And again, thank you very much and have a great day.